Hey, good morning, everyone. Hey, good morning. Good afternoon, everybody. Thank you for attending the joint webinar between myself and Mark Dannenberg of Options Moneymaker. And I'd just like to start by just telling you a little bit about myself. Can everybody hear me okay? Can you hear me okay? Just give me a yes if you can. Okay, terrific. Um, just a little bit of background. I'm a graduate of the University of Pennsylvania. I'm a former professor.
I hear you
Um,
good, Mark.
Thank you, Mark. I'm a former professor at Jefferson University in Philadelphia, and I've been involved in the financial markets for over 20 years. I began trading the futures and forex markets about 10 years ago, and I've been involved in the optimization of software systems for the last 10 years via mathematical modeling. And really, what I just wanted to start off with was pointing out this is a very unique business. I mean, many vendors ask us to buy software or buy trading techniques that you can't even see until after you purchase them. They come with back-tested strategies and entries with automatically quantified um, predictive value. And just to show you quickly, many of these systems, because they don't understand the underlying mathematics behind the indicators, are just plain broken and just don't work. And just to show you a quick example, there's a system out there that it's a support-to-support system that's based on a stochastic oscillator and Renko bars. Unfortunately, in order for an oscillator to work, it's got to have four numbers to plug into its formula. It's got to have the high of the bar, the low of the bar, the open, and the close. Because what it's looking at is the relationship between the high and the close and the low and the close. Without those four numbers, the oscillator line is not going to be accurate. So if you take a look at if you take a look at the at this range bar chart, you can see that in each of these candles gives you a high, a low, and an open and a close. And this allows you to accurately trace out this oscillator line. But if you look at a Renko bar chart, there's a high and a low of every bar, but there's no open and close. So this stochastic line is totally inaccurate. So you have to be really careful and do a lot of due diligence on your system, or you are going to wind up with acquiring a system that's just plain broken. Now, basically, there are two basic underlying strategies that software developers take when they develop a program to define market direction. And one is that based on price action, in which price action alone is used to trigger a buy or a sell recommendation. The other is indicator analysis, where a unique composition of indicator signals, i.e. some confluence of indicator signals, is going to give you, like, say, a blue dot buy or a red dot sell with a certain sensitivity and specificity, which equals some predictive value. Now, a further subdivision are those that trade one time frame and those that trade multiple higher time frames to confirm the validity of the entry. Now, what we've done here at Rightline is we sort of reject all these hypotheses and accept them all at the same time. We believe that they all need to be combined. We don't believe that price action provides you with enough predictive value to become a successful trader. Neither does any single confluence of indicator signals, i.e. the combination of an oscillator signal, the combination of a MACD signal providing you with a blue dot long entry or red dot sell signal is not going to provide you with a entry with a high enough predictive value to make you a consistent winner. Now, if either of the above were true, the financial markets could easily be robot traded, if there was some confluence of signals that could trigger you into a long trade or a short trade, then making money in day trading would actually be a fairly easy proposition. Unfortunately, it's just not. So the goal of our software is to combine all of these elements. The first and most important is that of market structure. And you'll see how we define market structure, how market structure plays an integral part of providing you with a very, very low risk, high probability win entry. We also confirm market structure with indicator analysis. And thirdly, we want to assess what the market's doing on multiple time frames without having to actually have charts, without having to look at multiple time frame charts. It's very, very difficult to look at 2 or 3 time frames at the same time to confirm your entry. So what we do is we have developed indicators that perform fractal analysis. And fractal analysis is simply the synthesis of data from multiple time frames by one indicator, so that when it gives you a signal, it's using data from multiple higher time frames. And then combine that into a simple trading platform that has been optimized mathematically to provide you with remarkably accurate buy and sell signals. Now here's really our philosophy. Our philosophy is we do not call tops or bottoms. And I don't believe that any software has the capability of doing it. I mean, I've looked at every single indicator ever created. They really are all variations of either an oscillator, such as relative strength, stochastic, the CCI, or they're a variation of a MACD-based system. There are no other mathematically defined indicators. It's either one of the two. And neither of those have the capability of calling a top or a bottom with the sensitivity and specificity required in order to make you a successful trader. Oscillator divergence, MACD divergence is constantly getting run over. And you'll see in the charts that I'm going to show you very shortly how people are constantly trying to call tops or call bottoms and constantly getting run over. Now, and obviously if you don't call tops or bottoms, we don't trade reversals, and we don't counter trend trade, and importantly, we don't try and predict breakouts. When the market's in chop, again, we don't believe that any algorithm, any confluence of indicator signals is going to predict when the market is going to break out of chop and then head up or head down. We are only trend traders. In fact, we are devout trend traders. We believe that institutional traders set the trend, and we want to be on board with them. It's the goal of our software to define a trend early and get us on board, not only quickly, but at a very safe spot. Now let's take a look really briefly at just price action. Now from this, I cannot trade just by looking. I am a big fan of candlestick patterns, and I do use them in my trading, and in the live trading room. We do look at the power of bullish action and say on an 8 range, a full 8 range bullish bar, or a doji. But I don't believe there's enough information provided in candlestick patterns in order to accurately provide you with tops, bottoms, and low risk entries. So what we do is we start to define market structure. And what we have said is that when you're above the 50 period moving average, and this is just a simple 50 period moving average we use, what we do is the bulls are in control. So we only go long above the 50. Below the 50, we only sell short. Then we have a proprietary 15 period moving average that further defines market structure. And we only sell short when the 50 period and the 15 period are red, and we only go long when the 50 and 15 period moving average are green. And we never break that rule. We need the 50 and the 15 red for a short and the 50 and the 15 green for a long. Then we've defined mathematically the distance we want the open of the candle to be from our 15 period moving average to take a trade. And what we've done after using a year of market replay data is determine that we want that open to be no more than 4 ticks from support on a long, 4 ticks from resistance on a short. And we have an indicator that this right here, this is a 7, tells you that the open of this candle is 7 ticks off our modified 15. That would tell you that this entry is going to provide you with too much risk. You're too far off support. Because what can potentially happen is right after your entry is the market can retrace right back to support. We want to be tight to support when we take this long trade. Then we look at the three parameters I believe are key. These are the 3 things that we want in our favor. If we define market structure, we want to confirm it with indicator analysis. And we do indicator analysis on 3 parameters. The first on order flow, the second on stochastic direction, and the third on momentum direction. Now, order flow measures the number of executed buys and executed sell orders at each tick and compares that with the number of executed buys and sells on the previous tick. We know that the stochastic is just another oscillator. You could use the CCI, you could use a relative strength. It doesn't make any difference. We just choose to use a fast stochastic. And actually, this is the least important of the lines. The third line is momentum, and that's a MACD-based system. Now, if the line is red in our 3-line indicator, and that means that order flow, stochastic, and momentum are down on all analyzed time frames. If it's green, it means that order flow, stochastic, and momentum are up on all analyzed time frames. If it's blue, we're up long term and we're short down term. Now for orange, we're down long term and we're up short term. Now the reason why I'm going through these fast is these colors are not important. All of this relevant information is projected onto the price bars. So you don't even have to look at the 3-line indicator to determine whether you have confirmation based on indicator analysis. And that's easily shown right here. Let's take a look at this trade. Remember, we only trend trade. Now, the price action is moving through the 50-period moving average, and you want to break resistance to the upside with a 2/3 candle body close above the 50. And you see that the candle's outlined in dark blue. That tells you that order flow, stochastic, and momentum are with you on this trade on multiple time frames. Now you're going to see the signal flash intra-bar. And since it's a range bar, you know where the close of the candle is going to take place before the candle closes. So you set your buy stop order 1 tick above the close of the candle. It closes and you're in long. Same thing happens to the short side. We've broken the 50 to the downside. Remember, we only go short below the 50. We have the modified 15 red. We have the 50-period simple moving average red. We cleanly break the 50 period. The candle's outlined in yellow. That tells you that order flow, stochastic, and momentum are with you to the downside. Your sell stop is placed 1 tick below the close of the candle. The candle closes, ticks you in, and bam, down you go for the trade. Now, some people in our trading room refer to these as breakout trades, but I don't consider them breakout trades because we're not determining what the end of chop and the beginning of a trend. I consider this to be a trend trade because we've already defined that the 15 and the 50 are down, so that we have a short trade that's intact. All we're showing here is that the market finally breaks all resistance to the downside, or all support to the downside. And when it does break support to the downside, it does so with order flow, stochastic, and momentum with it on multiple time frames. So although some people refer to this in our room as a breakout trade, it really is not a breakout trade. We are simply taking a continuation short trade after price breaks all resistance to the downside. Here's a break of the modified 15, our proprietary trend line. The 50's down, the 15's down. It shows you that we're trend trading. We are in an intact downtrend. As soon as we break resistance or support to the downside, candles outlined in yellow, order flow, stochastic, and momentum are with us to the downside, and down we head for a nice short trade. Same thing to the upside. Now I want to hurry up. I don't want to take more than 30 or 35 minutes because I want to give Mark Dannenberg plenty of time. I know it's late in the day. Now, remember I said how important market structure is, and up till now I've only mentioned the color of the 50 and the 15. And I told you that we're trend traders. But we're also major league retracement traders. What we want to do is we want to take a conservative retracement into a defined trend. So in this particular case, now the A, the B, and the C here are not placed on this slide by myself. They're placed on the slide by the software, and then we shot the slide. An A appears anytime two candles of the same color trace out in a row. In this particular case, this is a doji or a I can't remember if it's a hanging man or a hammer. I think it's a hammer. But we get two red candles in a row. We get an A. We have a defined downtrend. Then the B is a pull-up or an upward retracement into a downtrend. Now I have simply put my setting on our ABC indicator to signify a B candle in magenta. And I have an audible alert. So when a B candle signals, I hear a beep, because that tells me I have a potential trade coming up. And the C will flash if the B has the potential to be engulfed. In this particular case, you'll see the C flashing. You'll know where the candle's going to close because of our range maker. It's going to tell you. So you put your sell stop one tick below the close of the C. And all of this is done by the software. You don't have to do any work. All you got to do is put your sell stop in, and you're going to see later you don't even have to put the sell stop in. I'm going to put the sell stop in for you. Now, remember what I said? I had mentioned how we are trend traders, and this is a defined downtrend. Everybody in this B candle are buying. These are the pull-up candle or the retracement up. And what we're looking to do is exploit these people. These are the people who are counter trend trading. They're taking a long below the 50, and they're taking a long into what's soon going to mature as to a clearly defined downtrend. And that's what we try to do with our software. We try to catch people who are trying to trade in the wrong direction. And you're going to see it here. We have a perfectly defined downtrend. Now, why these people want to go long here in this B candle, I have no clue. But people are constantly trying to call reversals, constantly trying to call bottoms, and that's what all the people in this B candle have done. We got a flashing C. We know that we have a potential for an engulfment. The candle does engulf. We're in one tick below the close of C, and there's two forces that push this market lower for us. One is the addition of new sellers, and the other is all the people in the B candle who are getting stopped out. So a lot of these ABC trades get shoved down really fast, because once you're ticked in, all the people in this B candle start getting stopped out, and those stop orders start pushing this move hard to the downside. Same thing. Market comes down, retraces right back into the modified 15. Remember I said we only want to be 4 ticks off the 15? Here we're right into it. Engulfs all of these people stuck in this failed counter trend move in the B candle. Now, I don't know what we would do without these people, because these are the people that when we go home almost every day with money in our wallets, we're taking it from these people, taking these failed counter trend moves, trying to call tops and trying to call bottoms. This is a momentum entry. Market comes up, retraces right back into the modified 15. We're in 1 tick above the close of the candle. The candle's outlined in light blue. That tells you have order flow and momentum with you. Up you go. If you're still in the trade on this retracement, you're up further. If for some reason you're on a tight trailer and you've been ticked out, JT, I'll go over our ATM standard. We definitely scale out of the trade. On an 8 range, our recommended ATM is we trade 4 contracts. We take 2 off at 5 and 2 off at 10. So if we get a 10-tick trade, we make $300. On a 13 range candle, we take a contract off at 9, a contract off at 15, 2 off at 9, 1 off at 15, and 1 off at 22. We get 22 ticks, we make $550. Here, same thing. This is a momentum signal. This doesn't engulf the people in this failed counter trend move, but it tells you that we know that the downtrend is intact. We get a retracement signified by this green candle. We get a reaffirmation of the downtrend. The momentum signal tells us that we have momentum aligning on multiple time frames, and we're short 1 tick below the close, and bam, down we go. Remember, we only are trend traders. We stay with the 50 and the 15. We look for these retracement trades. We look to overrun these people in these failed counter trend moves, overrun these people trying to call tops and trying to call bottoms. Now, I'm just giving you multiple examples of the same trade over and over again. Here it is. Market comes up. Both these green candles are counter trend trades. The market is confirmed and it is in a confirmed downtrend. Get 2 green candles right up into the modified 15. Power entry short. Down we go. If you get ticked out of the trade, don't get this whole down move. You get another retracement right back to the modified 15. Short right here. Down you go again. Here's another break of the 15. It happens with order flow, stochastic, and momentum. You see that the candle surrounded in yellow. The 50's down, the 15's down. We stay confirmed trend traders, and down we go to the downside. And we also have other things that help us define risk. Now, in the upper left-hand corner, we have the slope of the 15. If you come into the trading room tomorrow, I'll show you a little bit more about how that works, the slope of the 50. Now, we don't use the oscillator to define overbought. What we use to define overbought, oversold is a difference between the 15 and the 50. You can see that as the 15 opens up a space between the 50, the market starts to get oversold. And when the space between the 50 and the 15 is 16 ticks or greater, now sometimes we can push it to 18 ticks. We believe the market's oversold and we don't enter any more shorts. When the space between the 15 and the 50 separates out too much to the downside, too much to the upside, that's where we decide the market's overbought and we don't take any more buys. We do not use an oscillator. I don't believe an oscillator has much predictive value. So now, in our platform, if the background is pink, then we have additional time frames that tell us that order flow and momentum are with us to the downside. If it's green, additional time frames, order flow and momentum are with us to the upside. You can see in the upper left-hand corner, we have the slope of the 15, the slope of the 50, the MA diff, which is really important, and we also put volume. I mean, we like to look and see if we're trading with a market that's dead without any volume, or we're really turning over contracts. And here's on our 15 range chart, we have on our 13 range candle chart, we have an initial 15 tick stop. We take 2 contracts off at 9, 1 contract off at 15, 1 contract off at 22. On our first target, our stops moves to a 9 tick trailer. I'm just going to show you really briefly. This is our equity curve directly from the trading room from October through April. We're up close to $25,000 trading 4 contracts. We're approaching 600% profit as far as net equity is concerned. On our auto trader, which is the same thing I just explained to you, but it does it all automatically, we're up close to $10,000, and we are approaching, again, 600% in profit, because the auto trader up to last month was only trading 3 contracts. Now, I want to drop this quickly and actually show you our platform and show you our trades. So I'm going to drop this. I'm going to rescale. Just hold on 1 second. And reshoot the chart. Okay, so hold on 1 second. Did that fill the whole screen? Okay. Let's take a look first at crude oil. This is the platform that we trade every day in the live trading room. Let me go back to yesterday. Now, today's trades got erased, unfortunately. Yesterday, we had 3 trades and we had 3 winners. They all came on crude oil. We were plus 10, plus 19, plus 11, with net ticks of 40, and we had net equity of $900, $300 per trade. Here was our first trade. Actually, let me go to our first trade. Right here. Remember I said that what we want to do is we want to take trades into a confirmed uptrend. And now here we go. We break the 50 and the 15. We retrace right back deep into the 15. We were long 1 tick above the close of this candle, and this went up 10 ticks. And then came back and stopped us out. But then we had the same thing happen again. Came up, retraced right back into the modified 15. We're in again, 1 tick above the close of the candle, and this trade went 57 ticks. Now, I didn't take this trade. I was a little bit concerned about the pivot, but we have an auto trader. The auto trader took the 57 tick trade. I took the 10 tick trade. They're both worth the same. 2 targets, 2 off at 5, 2 off at 10, 2 $300 trades. Then we had our second trade in the room. We had a break of the 50 to the downside. A retracement right back into the modified 15 and the move down for 19 ticks. And then we had our third trade right here. This is the trade I was showing you. Break of the 50, candle surrounded in blue, order flow stochastic momentum with us. You can see the background is also green, additional bias. We were in one tick above the close, and up we went for 11 ticks. So we had 3 trades. And that's all we're looking for over and over again, these retracement trades. Now, if we didn't stop, these patterns recur over and over again. There's your break. There's your retracement. And down you go. Same thing again. Your break, your move down, your retracement, right back into the modified 15 and the move down. It happens multiple times, and very, very rarely does it stop out. This move down today, remember we need the 50 and the 15, both in the same color. The break of the 50 and the 15, we have the retracement, and we had the move down. And that went 9 ticks. So these patterns occur over and over again. Yeah, the same thing happened again. I mean, I could do this really all day because we see these patterns all day. You didn't take the trade. You were in here. You did not get stopped out on a 10-tick stop. You're in 1 tick below on this retracement right here. Goes all the way down to here. That's a 27-tick trade. Now, all I want to show briefly is one additional thing. In a lot of rooms, you have people calling trades. They call entries, and you don't get them. They're called retrospectively. You step away from your computer for a minute. What we do is we have our own NinjaTrader. We have our own right line Superdome. And I'm going to show it to you. Here's our Superdome. Now let's say, in this particular instance, we're trading crude oil. And let's say I want to take a buy stop trade right here at 101.91. I put it in.
Order pending.
It just appeared on my Superdome. We call this our direct entry system. So that if you want to be part of that direct entry system, not only are you going to get the call out in the trading room, but I'm going to put the trade directly into your NinjaTrader platform. If the trade doesn't mature, I close it and you're out of it. Whoops. Let's say I want to take a buy stop. I put it in.
Order pending.
There it is. It appears on your Superdome. Now, the number of contracts it trades is up to you. The ATM strategy is up to you, but you do not miss an entry. And if the direct entry system, for some reason today, on one trade out of the last 10 days, the direct entry system did not engage a trade. It went 11 ticks. It was a 2-target win. It was a $300 profitable trade. I did not book it in the trading room because the direct entry system didn't take it. So I could close it.
Order canceled.
Now, the market's closed, but if you give me the ability, I can also exit the trade for you. Let's say the trade's gone 7 or 8 ticks, and I don't feel it's going to make it to the first target. And that was one trade that happened today right at the close on our 13 range. I exited the trade early. I just hit the exit button and close for you. So I basically can control your Superdome for you. But the one thing I can absolutely do is make sure via the direct entry system that you're going to get all the buy stop and all the sell stop orders that I call in the room via the use of our own Superdome. Now, I don't know of any other platform that does that, or any other trading system, or any other company. We have an unbelievable amount of confidence in our entries, enough so that we will put them in your NinjaTrader for you and recommend an ATM strategy and actually calculate a net equity for you for the day. So let me just bring the slides up again. Is that scaled right, Leo? Just hold on 1 second, because I'm just about done. I'm just about to turn this over to Mark. Okay. Now, obviously, we believe that education is really important, and as part of coming aboard with us, we provide you with extensive videos, group and personal mentorship programs. We add these are all part of the big dog. You can do it with 2, 3, 4, 5. The number of contracts you want to trade is totally up to you. We really do support our software. Now, we never ask you to pay for boot camps, seminars, lectures, all the new indicator packages. We always offer upgrades free for life. These are all yours as part of becoming a member of what we consider to be our family. Now, what we're offering as part of this webinar is, now we never have sold the direct entry software. But we had a webinar earlier this week that was extremely successful. So we're repeating the same offer. The order flow software plus the direct entry software for life with the video tutorials and 2 hours of mentorship with me and 1 month in the live training room is $29.99. That's our special. Normally, that's the price of our software without the direct entry system, and if you want the direct entry system, you have to lease it. Now, here's the thing, and this is the last point I want to make, and that is that we're not asking you to give us any money or do anything for us. What we would like you to do is simply come into our live training room and take a 3-day free trial. See how we trade, see how we do, see how our system works. And I think that you'll be so impressed with it that you will stay on board with us. Now, we will send everyone a link to come into our trading room. We've dropped the username and password, so you do not need that to get in. Just come on in tomorrow. Tomorrow's Thursday. Come on in on Friday. Come on in on Monday. We'll give you 3 days and see how the system works. And I think that you will really, really be impressed. We make money almost every single day in the room. And you'll see the direct entry system operate. Every time an entry is taken, it stamps the candle with a DEL for direct entry long or a DES for direct entry short. Now, if there's any quick questions, I'll take them. I only want to take a couple because I really want to turn this over to Mark now. Any quickies that I can go over? We trade gold, we trade crude, and we trade the Russell, all three at the same time. We look for entries on all 3 systems. The direct entry system is operational on all 3 markets. All right, well, listen, I really appreciate everybody's attention and time. And at this point, let me turn this over to Mark. He is a tremendously successful options trading system, and he's going to discuss it with you now. So thank you very much. Mark, the floor is yours.
Thank you very much, Mark. Can I just test sound here? Can you hear me okay? All right, thank you for that. And let me just make sure that you can see my slide, The Art of Trading. Okay, perfect. Well, first of all, I just want to start by thanking Mark for partnering with me today to do this free webinar. I've listened to Mark before walk through a description of his platform, and I have to say, in my years of trading, over 25 years, and I have experience in futures, commodities, options, stock trading, Mark is by far one of the best that I've seen, and his software really speaks for itself. So those of you who are interested in trading futures contracts, most definitely I would take him up on his free offer. I may take him up on his free offer myself, just because I think what he does is pretty incredible. For the next 45 minutes or so, I want to talk to you about options trading. Options Moneymaker is a company I founded a few years ago, because I spent